We have with us Mr. Sumant Sinha, CEO, founder of ReNew Power, a pioneer in India's renewables revolution. Welcome to Business Standard, Mr. Sinha. How are you, sir?
I'm good. Thank you so much for having me on the show.
Sir, I'd like to start with the IEA's latest report, which was issued, I think, as December 6th. And it speaks of an accelerated pace of renewables, much higher projections from what they made last year. And it speaks of addition of renewable capacity in the next 5 years or what has been added in the last 20 years. So basically 2 decades of renewable capacity is going to be created by 2027. I just wanted to know from you, how viable are these projections in terms of the supply chain and costs? And secondly, will this global race for renewables, because the report mentions China as taking up half of that capacity and Europe and US being strong contenders. So will this global race affect India's renewable targets?
Yeah, in terms of the total targets that have been set or that the IEA is talking about, I think it's based on an analysis of several things. Number one, what does the world need to move onto the trajectory where we can limit carbon emissions to a point where we don't cross, at this point, 1.5 degrees looks unlikely, but keep it as close to that as possible. And the second thing is based on, I presume, certain amount of work done on what is doable and what is possible. And so let me comment on the second part, because that's really the direction that your question is moving towards. I think as far as the overall issues around execution are concerned, I think where we've got to now with the effort that has been put in over the last 10 years or the last 20 years is that we have a lot more companies that are now realizing that renewables is the way of the future as far as the IEA forecast is concerned. Look, there are several issues there. I think number one is that all the effort over the last several years has meant that now there are many companies that see the opportunity in our sector and are now therefore looking to come into the sector. And so purely from an execution standpoint, there are many more arms and legs that are out there now willing to get into the sector. The second thing is that I think people are able to now see the growth in the sector and are therefore looking to get into the manufacturing supply chain. Similarly, people are looking at and governments are looking at expanding transmission infrastructure and so on. Where there are limitations, however, I think is in the area of local permits and land acquisition, because that sits in the hands of local governments anywhere in the world. And that's an area where I don't think local governments have fully understood that they need to move much faster because they don't see the global targets and they have no responsibility for it. And so therefore, I think permitting globally is moving at a much slower pace than it needs to. And that includes the land acquisition process. The second area where I think more work needs to be done is in the area of grid management, because as all of this renewables hits the grid, are grids prepared to absorb so much intermittent renewable energy? And do they have the right systems and processes in place to really be able to service the demand side? And I think a lot of work needs to be done on that area. We need more storage solutions coming in as well. I feel that that will happen, but that's going to be an area which is going to create bottlenecks every now and then, and that may create some problems. So I would say by and large, the world is now well placed from an execution standpoint. There are a couple of bottleneck issues, but I feel those will also get addressed as more and more players come in. I think the bigger issue that is now emerging is, what we're talking about here is the electricity sector primarily. Beyond that, renewables also has a massive role to play in addressing the 75% of energy that is not electricity. And there also renewables, I think, we need to do a lot of technological work on finding use case solutions to extend the role of renewables into this other area, whether it's through green hydrogen, whether it's through sustainable aviation fuels, whether it's through ethanol or whichever other mechanisms we have to find. But we do have to work in that area. And I think that's where a lot of work will need to happen. And that will then truly allow us to get a much broader amount of renewables into the system.
Coming to ReNew Power, you've been here for more than a decade,
Mhm.
and you've seen pretty much the entire the way renewables have progressed in India and globally. For the next 5 years, do you see a change in RenewPower's strategy? I saw your latest presentation where
Mhm.
you talk of RTC, ESS, and also corporate PPAs. How do you see yourself, moving into businesses which are higher margins, moving into newer technologies? Will this be the next growth phase?
I think so. I think so. I think what will happen is that we are really, in some ways, beginning to look at ourselves as not just being a company that adds renewable energy projects on the ground and supplies into the grid. We are seeing ourselves as a bit of a broader company whose job it is to really provide solutions around decarbonization across multiple dimensions. Of course, our core business is to clean up the electricity supply through renewable energy. But as I said earlier, renewable energy will have a lot more applications in the other areas of energy consumption. And so I think those are areas that we want to really play and explore. So that's, I think, one area of growth. The second thing is that so far, while grids have been obviously, or discoms have been our buyers of our power, going forward, as we see many more corporates are now joining, the whole bandwagon of going down the decarbonization path, I suspect that they'll become bigger and bigger customers for us as we go forward, and therefore we'll start dealing directly with corporate customers as well. And then within the grid itself, and the kind of solutioning that will be required will not just be produce solar and dump it into the grid. It'll be much more around finding solutions using wind and solar and storage that reduce the load on the discoms through what we, as you know, call the round-the-clock power solutions.
So you try
So I
to
think that's the
eliminate
direction.
intermittency. You try
Sorry?
to eliminate intermittency,
That's right.
basically.
That's right. So I think that's the direction of travel across multiple dimensions for us, for us as a company.
So now you stress quite a lot on this, on the industrial side, I'll say,
Mhm.
where energy is used.
Mhm.
And is your venture in Egypt,
Mhm.
the $8 billion project for green hydrogen, is that a natural extension of that? And is any such thing being planned in India, or is it because Egypt is one of the most promising places for green hydrogen and green ammonia?
Yeah. No, let me take a step back on that particular issue.
Mhm.
Look, we are looking at green hydrogen very broadly. Um, Green hydrogen eventually is going to be something that will have a global application. It will not be limited by borders. And so therefore you have to find places which are the cheapest places to produce green hydrogen, wherever they might be in the world. India is, of course, a really good location to produce green hydrogen because we have fairly good solar radiation and we have a supportive policy environment. We have reasonable wind quality as well. So India is certainly a market that we're going to be looking at very, very seriously. India is also one of the largest consumers of green hydrogen. Um, of gray hydrogen. And so we have a joint venture in India that we are looking at putting together with Indian Oil Corporation and L&T for servicing the Indian market. In addition to that, we would be looking at whether we can use India as a manufacturing destination for exporting green hydrogen from here to other parts of the world. Similarly, we're also looking at other geographies around the world where it might be economical and cost effective to produce green hydrogen. Egypt is one such place, but there are other places in the Middle East as well, and other parts of the world, including the US, where it
Mhm.
might be sensible to produce green hydrogen. Now, you alluded to our project in Egypt. I would say the Egyptian government was one of the first off the blocks to essentially uh, sign up with various companies in terms of putting a frame agreement together. And we were one of the companies that they chose to go ahead with. Now, what we've signed with them today is a frame agreement. What
Mhm.
that means is that it allows us the opportunity of doing a lot more work in terms of feasibility studies and so on. There's a lot of things that the Egyptian government needs to do in terms of providing transmission infrastructure, getting all the local permits and approvals and so on. And so a lot of these things have to come together, which will take another 12 to 18 months at the very least. Once all of that is done, it's only after that that we'll actually make the actual investment decision of whether we
Okay.
go ahead or not. So there's some wood to chop, as it were. as far as the Egypt project is concerned. And look, it's not like we'll invest altogether suddenly one day $8 billion. The idea is to first do a pilot and then scale it up after that. So I think, we are a prudent company and we therefore will go about it in a way that makes sense. We are going to be careful about capital allocation decisions. But the reality is that green hydrogen is an enormous opportunity. And we need to do a lot of development work right now over the next 12 to 24 months, including talking to potential customers of green hydrogen. And I think over this time period of the next 12 to 24 months, you'll start seeing projects then coming together. And as they come together with all these different elements put together, offtake, land, renewable energy capacity, port issues, and so on, once all of those are sorted out, then you'll start seeing actual investment decisions getting made.
So in India, I was looking at another technology. Now you have green hydrogen, but there are many industries where technologies are not, in fact, in the infancy for eliminating carbon. So CCS is kind of a viable option which is being pursued in Europe, especially by Equinor in Norway, and ONGC is also planning one such project. It can be a way for industries to emit carbon using existing technologies, but then transport it, and as carbon as a service, you store it in the seabed. Are you looking at CCS also? ReNew Power looking at CCS?
Not yet, to be honest with you. Okay. But it is, I think, something that will emerge as we go forward. I think today we have our hands full just doing the green hydrogen business development and project development and finding customers for that. The next wave after that is likely to be CCUS. But I think there's a lot of technology work that still needs to happen. Because I think from a cost standpoint, CCUS is still rather expensive. A lot of oil and gas companies are pushing forward in the direction of CCUS because their core business is based around carbon emissions. Sure. So for them, this is something that they absolutely must find a solution for. And so in some ways, there's a little bit of hopefulness and wishfulness in their efforts. But in doing all of that, perhaps they're able to find a viable technology and cost solution commercially that makes sense, in which case it might take off. But I think today it's still some ways down the road.
So you have around 13 gigawatt in the pipeline commissioned and in the process. Like India's targets for 2030, does ReNew Power have any targets both in terms of capacity and also in terms of an investment timeline? If you look at next 5 years, say.
Yeah. No, I think we do. We have thought through what we want to achieve for 2030. It's not something that we have right now talked about in the public domain, but we have a sense of the direction that we want to go in. I think, if you just extrapolate from where we are right now, I think that's one way to arrive at a potential number without telling you what our thinking is so far, which of course we will talk about eventually. Look, India is likely to get to about, let's say, 400 gigawatts to 450 gigawatts of renewable capacity by 2030. That's the target, right? Now, let's assume for a second that we meet the target. Our market share of all new incremental projects that are getting set up is about 10 to 12%. And if we have to set up another 300 gigawatts to meet the target, then you can assume that we should be looking at an incremental 30 to 35 gigawatts over the next 8 to 9 years. And add that to our 13 gigawatt current pipeline will take us to something in the 40 to 45 gigawatt type range, just looking at basic extrapolation of our current market share. So I think that's something that you should just assume would happen organically without any real intervention from our side, which of course there will be. And so therefore, we would hope that our actual delivered capacity is more than that.
So that would be led by solar, followed by wind and hydro. Is that right? That's your current mix?
It's hard to give you a specific answer because it all depends upon grid management issues as well. Today, we already have about 50 gigawatts of solar in the grid. And absorbing much larger amounts is not going to be that straightforward. And so at some point, solar will peak. And wind being the other alternative source of renewables will then begin to have a stronger role. So I think eventually the reality is that we'll have more solar and less wind, but there will still be a significant amount of wind. So I would say as the grid goes and as the overall national capacity addition goes, so will our capacity addition go. So we'll probably have more solar and then some smaller amount of wind.
What kind of average costs you see to create, let's say, 1 gigawatt of solar wind combined? I mean, I'm just trying to get an idea of the investment scale. What kind of costs are involved?
Well, just to give you a sense, right now we have a pipeline of about 5.5 gigawatts of projects that we are building out, which will get built in the next 18 months. The total capex for that is close to about 35,000 crores.
Okay.
Okay. So you should assume that, and of course, there's a certain breakdown of wind and solar within that. But you should assume that one megawatt of solar costs about 4 crores, 1 megawatt of wind costs about 6.5 to 7 crores. And so some mixture of the two would mean a weighted average cost of about 5 to 6 crores per megawatt.
Is it too early for India to think about offshore wind and floating solar? These seem to be the buzzwords in Europe, especially, and they are newer kind of technologies. You have panels tracking the sun as a test project in Amsterdam, and several offshore wind projects. Where do you see that going in? I mean, India has come out with a bid for offshore wind, 4 gigawatts also.
Yeah, actually, before I answer that question, let me just step back a little bit to the previous question. You know, we talked about 35,000 crores as being our investment plan over the next 18 months, and we kind of glossed over that number. But you know, there aren't that many companies in India that have capex programs of that scale and size. Okay, so I think the point I'm making is that renewable energy as a sector within the Indian infrastructure space and overall within the overall capex space in the country is really increasing dramatically. And to my mind, will be one of the biggest single sectors of capex investment by the Indian corporate sector over the next 7-8 years. So I think just the scale and size of what we are doing is increasing very dramatically right now. And I think that's something that is not necessarily fully appreciated by people. But to answer your second question.
So just one point. Have you closed funding for all this 35,000 crores? That's all done? Or
so pretty much, look, the equity we already have on our balance sheet.
It's a 70-30 mix, roughly?
It's a 75-25 mix by and large. So the equity we already have, either sitting on our balance sheet or does get generated as we go forward. But the bulk of it is already sitting on our balance sheet. And debt financing, look, we've raised a lot of debt financing. We've just recently tied up $1 billion of syndicated loan facilities from international lenders. We've done a number of bond issuances, international green bond issuances. We've got 5 different bonds outstanding right now. And then, of course, we have lenders like PFC and REC. So yeah, I would say that more than 2/3 of the total debt financing is already lined up, and the balance will get lined up. So I don't see any issue there. So to come to your second question about offshore wind and floating solar, look, I think floating solar is more expensive than is obviously on land solar. And the second thing is that today we can set up solar capacities in Rajasthan where there's enough barren land. And so land is not a constraining factor for solar. So therefore, there is no real reason for us at this point to go on to floating solar. If you were a land-strapped country like Singapore, for example, right, then of course it would make sense. But today we don't have that limitation. And as I said, all these targets that we have can easily be met from land in areas around Gujarat and Rajasthan and Western Madhya Pradesh, which is where, in fact, solar radiation is the best. All we need to do is build out enough transmission infrastructure. And as long as we can do that, that'll get done. As far as offshore wind is concerned, it's a similar problem, which is that offshore wind is going to be at least twice as expensive as onshore wind. And the question is, who's going to pay that extra cost? Will it be that DISCOMs are very price sensitive, so they're not going to do it. So unless the central government comes out of the viability gap funding scheme, it's going to be very hard to get offshore wind off the ground. And you talked about a 4 gigawatt offshore auction. Actually, what they're auctioning right now is the seabed. And so it's the opportunity for people to go and block the seabed.
True.
But whether that eventually leads to a project is something that the government will have to work on separately in terms of developing a specific program around that.
So you mentioned the price sensitiveness of discoms. In India is seen in many cases a price sensitive market. Um, if price drives India's renewable growth, do you see that as a barrier for innovations, for newer technologies, for newer products?
Sorry, what is a barrier to newer products?
Price, because
Yeah,
low tariffs and price, like you mentioned,
yeah,
offshore wind is twice,
yeah,
floating solar. In other
yeah,
countries, even like in Egypt and all, there seems
yeah,
some appetite for paying a
yeah,
higher tariff.
yeah. No, no, I would tend to agree with you to some extent
Hmm.
that there are two ways of looking at it. One is, of course, that having a low tariff prevents us from experimenting or bringing anything new that may cost higher to begin with. And then, but where economies of scale may over time bring the cost down. But this is, I think, where the central government has a role to play. And I think they are playing that role, where they
Hmm.
are trying to subsidize initially technologies which are new, like offshore wind, for example. And they're trying to create the ecosystem where costs come down, and so that then absorption and rollout can be much faster. But the fact that we have a low cost environment, you can also, in some ways, it also fosters innovation a little bit because
Hmm.
people have to obviously stay below a certain cost curve. It's a
Hmm.
competitive market, so you have to be very cost efficient and so on. So I think there are pros and cons. It does prevent us from getting new technologies which may be more expensive. On the other hand, if you can find new technologies that can allow us to bring the cost down on day one, then those technologies will get a lot of traction.
So do you see your revenue streams changing in the next 5 years in the sense that right now corporate PPAs and hybrid and RTCs are a smaller component? Do you see that changing over the next 5 years, and what kind of shares you expect to garner in these? Will you have a more balanced portfolio then?
I think so. I think you'll see much more of our sales going towards the corporate market directly.
Hmm.
And then, of course, as we go forward, most of our new projects are being done with SECI, whether it's round-the-clock projects or it's direct vanilla wind or solar projects. And so our offtake mix is shifting very strongly towards either SECI or towards corporate PPAs and away from discoms directly. So
Okay,
because we're a company that started 10 years ago, in the first 5, 6 years of our evolution, 100% of our PPAs were with discoms.
sure.
Today, that number is down to 50%. And by the
Okay,
time we finish building out the 13.5 gigawatts, the discom exposure will be down to about 30%. And as we
okay.
keep rolling forward, the direct discom exposure will keep coming down even more substantially.
And do you see this impacting your margins? You see better margins?
I think better margins come out of innovation on the
Hmm.
execution side. They
Hmm.
come out of a more integrated value chain play,
Hmm.
whether it is doing development ourselves, doing some degree of equipment manufacturing to make sure that we're not exposed to that degree of risk, and much better execution efficiencies arising out of scale.
Hmm.
The other thing that is very important now, which I don't think people are appreciating sufficiently in the industry, is how you run your assets, and
Okay.
whether you have really strong digital backbones and expertise to run your assets. Because if you do that properly, you can get at least 3 or 4 percentage points extra performance out of your assets than if you were running your assets not so well. And that can have a big impact on your returns as well. So I would say our returns are going up primarily because of all of these interventions that we're doing in the market. Now, of course, on the flip side, there's more competition as well that is coming in.
Sure, that's what
And so
exactly.
there is, to some extent, therefore, the bidding is becoming a little bit more aggressive. But I think between the two, we are kind of staying at a fairly healthy place from a return standpoint.
Why ask this is your receivables have come down in your latest, the latest quarter, but it's still down, I think, 230 days or something, if I'm not mistaken. Is that an industry average, better than industry, or how do you see
So
that?
it really depends on when you started as a company. Because
Mhm.
if you started earlier, then the chances are that you had some of these discom exposures,
For sure.
right? And that is probably a bigger part of your portfolio. And if you started more recently, then you probably have only SECI as your off-taker, in which case your overall situation is probably somewhat better. So I think it really depends on your overall history. But I would say that our receivables are improving, and they'll continue to improve quite a lot substantially as we go forward, because the government has come out with this latest LPS scheme,
True.
which is really causing the discoms to be a lot more current on clearing their payments right now, as well as the backlogs. So I think you'll see an improvement in the receivables continue to happen over this quarter and the future quarters as well.
You don't see any defaults?
No, 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 no. We have not seen any defaults in our entire 10, 11-year history as a company. We have not had a single default or a single situation where a discom has just said, look, I'm not going to pay this. In one or two instances where that has happened, we've gone to courts, and the courts have inevitably ruled very strongly in our favor. So that is not something that we've seen happening in the sector. And that's actually a very important point, because discoms pay late, but they do pay. Right. And I think there is a very strong legal underpinning to our sector in terms of contractual payments. And look, as I said in the beginning, we were a much smaller company. Our entire offtake was with discoms over the first 6-7 years of our history, and yet we were able to grow and thrive. So I think as that percentage of discom exposure comes down, I think our situation will only continue to improve substantially.
Sir, I believe in the SECI tenders. I mean, what SECI has done is it's taken the risk from the developer and it's taken it on itself, right? So the PPAs it has with the discoms, it's responsible for those payments. But I believe that SEBIs are kind of walking at even having PPAs with SECI. So SECI awards a tender, but then it has difficulty in having back-to-back PPAs for the power. Is that happening? I mean, is that a problem?
No, look, it happened only during the time of COVID, when power demand fell substantially. Discoms suddenly started wondering, how much power they really needed. At that time, SECI had done a lot of auctions, and therefore they had a difficult time selling some of those PPAs. Prior to that, SECI had absolutely no problem selling PPAs, selling the projects at all. It's only during COVID that this problem arose. And I think over the last 12 months, SECI has put in a lot of effort in clearing a lot of the backlog. A lot of that has now been done. And I think, therefore, SECI has done some really terrific work in doing that. And now what they've told the discoms is that, look, if you come to me with a demand, so, then you have to have got your state regulators approval as well.
Okay.
Earlier, the state regulators approval used to be done after the discom had signed up with SECI. So there were two levels of delay. Auction would happen, then SECI would find the discom, and then the discom would get approval from the regulators, right? And that process sometimes could take 3 months or even 6 months. Now what's happening is that SECI is telling the discoms, guys, you get your SERC approval and then come to me with your appetite, and then I'll do the bid. And so they've actually made the process a lot more, I think, streamlined and a lot more certain, which I think is quite good.
Sir, now that you say a lot of exposure to SECI and about the tenders, I was wondering whether the quality of tenders can be improved, in the sense that if you look at some of the tenders that happen in Germany, US, or Chile, they are these time block tenders. There are tenders where you get much higher tariffs for peak power. And in Germany, there's been a tender where you aggregate a lot of smaller renewable plants into something called a virtual plant. And I mean, these kind of innovations you think can happen here, or are they going to happen? Will that be good for the Indian renewables?
They will happen.
Virtual PPAs. Is India ready for it?
No, so look, I think these innovations will happen. I think the Indian policy making system moves, I think, perhaps at a certain pace, and they want to be, they need to be sure of what they're doing before they go ahead. And so I think they're all looking at what's happening in other parts of the world, and some of those innovations and some of those ideas will certainly percolate into India as well. I think where we need more institutional capacity is really at the discom end. I think discoms really need to, ultimately, they are the buyers of power, and they need to be able to tell SECI, look, we need this kind of power at this time period, and for that, I'm willing to pay so much more or so much less. That level of interactiveness, I'm sure SECI would like to have, but I'm not sure that the discoms are in a position to have those conversations, frankly speaking. So I think that's really where the rubber meets the road and where we need to build institutional capability.
Rooftop solar kind of, I mean, it was always there, but then now with the Prime Minister Modi, inaugurating a separate site and trying to push it, it's kind of has been the Achilles heel for India, the CNI segment and rooftop. Do you see that being viable for a company of your size, or it is too distributed in the sense that there's not enough scale in that?
Yeah, we did have a rooftop business for a few years where we tried to really add a lot of capacity as much as possible. After about 4 years of effort and a lot of intensive effort, we got to about 125 megawatts.
Okay.
And we just felt that it was a very difficult business. It was a very small business in terms of the total size and scale. And so that's why we actually sold that business. But we are focusing on the corporate PPA business. So then that is something that we think makes sense, but at a utility scale level.
Okay.
I think the rooftop market is a market which perhaps lends itself to smaller companies that are operating in more local areas rather than to bigger companies like ours.
So a question more on India's targets. I mean, currently we do about 13 to 15 gigawatts a year, I mean, give or take. But you need around, I think, 30, 35 if you need to get to these 450, 500 levels.
Yeah.
And if you exclude hydro, then the targets are really steep. How can this jump be made? I mean, what are the core issues that are affecting? Because utility solar is kind of, they are doing well in the tenders. It seems the CNI and the rooftop business is the one that's suffering. But where do you see the choke points? What can be done to?
The choke point, frankly speaking, actually sits at the end of the discoms.
Okay.
Because see, the discoms is really where the electricity sector meets the consumer.
Okay.
And if that whole area, that front end, if that does not work very well, then consumer demand does not find its way back into the end of the value chain. Okay, and we are sitting behind the discoms, right, from a customer standpoint. And so does SECI and everybody else, right? So the point is, look, the private sector is geared to add that capacity. The transmission infrastructure is getting built out by the government. SECI is sitting there waiting to do more auctions. But unfortunately, it's the distribution utilities that essentially continue to make losses and continue to operate as government departments and therefore do not have the institutional capacity, as I said earlier, right, to actually be able to translate the actual organic demand that is building up in India into the back end in terms of new demand and therefore new auctions and new capacities getting created on the ground. That's where the choke point actually lies. And that is something that really needs to be resolved. And that is why it's so critical for the government to pass the Electricity Amendment Act, because it really talks about reforming to some extent, not the whole extent, the whole discom sector. And actually, to be honest, if you ask me, that the way our current power sector is configured, it is not at a position where it's going to meet India's burgeoning power requirements to power its economic growth. We're just not there. And therefore, if we do not reform that sector, right, we will continue to have blackouts, power, not getting into wherever it has to get to, prices being inordinately high in the whole sector. I mean, look, there is no reason for us that when we are able to generate power, solar power at 2.5 rupees or wind at 3.5 rupees, for it to go to the final end industrial consumer at anything from 5 rupees to 10 rupees.
Sure.
Right? The whole system is wonky. Okay, and so therefore that whole system needs to be corrected. The whole tariff structure is wrong. The investments on the consumer distribution side is not there. The institutional capacity is not there. The management of the grid at the discom end is not there. All of that really needs to be improved dramatically. Otherwise, the power sector will become a choke point for India's economic growth.
But that's a state subject, right? That's the problem.
That is the
problem. I mean, there's only that much that Delhi can do.
Absolutely. And look, as I said earlier, Delhi is trying their best to resolve these issues, but it's a political issue, as we all know, right? And there are many, many vested interests that are involved with this. And so therefore it is what it is. I mean, this is India's political economy, and we all have to understand that. And we all do, I presume, understand that. But look, to answer your question of how do we get from 10 to 15 gigawatts to 30 to 40 gigawatts, I think some growth will happen organically, but whether we get to the full 30 to 40 will eventually depend on what happens at the discom end. But I think we'll sell more and more to corporate customers directly. The government will make that easier, has made it easier for us to do that. So a lot of the demand will go directly to end customers. Some demand, of course, will go up. And so we'll probably get to 2025 in the next 3-4 years. And then we'll see whether we're able to get to 30 to 40 in the back end of the 2030 of this decade.
You don't see land and permitting, which you mentioned earlier, as issues?
They are issues less in solar and more in wind, because wind is a lot harder to get land for and to execute on the ground. So yeah, it is definitely going to be an issue, I think.
And is there anything else, sir, you'd like to say about what really the government can look at? I mean, they are looking at a lot of things, but is there anything else, any policy measure, anything they can look at to kind of help achieve these targets?
Look, I think passing the Electricity Amendment Act is very important. The government has already introduced that act into the parliament, because that does take forward the reform in the power sector to some extent, right? Maybe not as far as we would need it to go, but it's better to get something than not to get anything at all. So, and that is very, very important. I think beyond that, look, between the Ministry of Power, the Ministry of Renewable Energy, and other policymaking arms of the government, various departments, I think there's a very strong push towards meeting the targets. We've given these as our commitments also to various COP agreements. And as I said, the central government on its part is doing whatever they can to help achieve these targets. I think we need more cooperation from the state governments. And I think if that does come through, then I think there's no way that anybody can stop us from achieving and exceeding these targets, actually, because I'll tell you honestly, the whole private sector is absolutely pumped, is absolutely ready to go ahead and achieve all these numbers, as are we, as a part of this, as a part of the corporate sector. Capital is not a constraining factor. In the Indian market is very attractive. Lots of people globally want to put money into India, whether it's debt or equity. So I don't think that's a constraining factor either. So I think, look, all the pieces are falling into place. One or two pieces still need to come into alignment. But even if they don't, we'll certainly see a step change in capacity addition in our sector. And so I think we're in a pretty good place from that standpoint.
So one last question. I mean, I should have asked this earlier, but how big will manufacturing be in your entire revenue stream? And does the PLI scheme make any sense? Because the big ones like Reliance and Adani are going in a big way. And I saw that you also have some manufacturing projects right up to the cell level. Now, where do you see that? Will it be kind of a peripheral thing, or will it be one of the major contributors to the revenue stream?
Look, I think for the country as a whole, getting into our own manufacturing is absolutely essential from a sort of political standpoint. It also gives India the opportunity of emerging as a supply alternative to China. And the world is looking to diversify away from China, because as you've seen with the Russian war, the whole of Europe has learned a very tough lesson. And then the same thing, people are now seeing that they need another alternative manufacturing destination, and India has the opportunity of being that destination. So I think that's very important. As far as we are concerned, look, we will do whatever we have to do to protect our IPP business and to make sure that we have access to supply security on the module side. So I think that is really the premise that is going to shape our thinking along the manufacturing side.
So it's more an in-house thing. You wouldn't be really using it.
That's right.
Thank you very much, sir. Thanks a lot for your time. And thanks for those comments. Very enlightening. Thank you.
Okay. Thank you. Take care.
Thank
Bye.
you, sir.